This is the sort of situation which, you look at a company doing this and you say, this balance sheet is extremely dangerous. And, at some stage, people are going to turn around, or banks will turn around and say, we're not lending you anymore, and the company goes under. I mean, this is what the US now faces. I do know that the demand for gold is likely to get out of control, if you like, we want to put it in those terms. Before the average American, the average European, the average Brit wakes up to actually what it's all about, and that is the collapse in the purchasing power of their own credit. Get out of credit. People in the PBOC who are not idiots can see what's going on. They will be making a similar assessment to the one we're discussing right now, and basically will want to get out of dollars as much as possible, as quickly as possible. That is why they've been buying gold.
Hello and welcome to the Reinvent Money podcast, a podcast about money and power. My name is Buitink, and today I have again the pleasure to talk to my good friend, former stockbroker and head of research at Goldmoney.com, Alasdair Macleod. Alasdair, great to see you again.
It's lovely to be back on your show, Paul.
Yeah, I last interviewed you in January of 22, just before rates were being hiked and the war escalated between Russia and Ukraine. And a month ago, we met each other at a conference in Belgium, organized by a great guy called Joachim van Wing. It was a lovely event with great people and delicious food, and some excellent speakers, including yourself. And you held a presentation titled Get the Hell Out of Credit. So I'd like to discuss that with you in more detail today.
Yeah, sure. Well, I mean, get the hell out of credit. I mean, if you look at the dollar, look at the euro, look at any of these currencies, and all you can see is disaster. I mean, putting to one side the developing World War III, which hopefully will be avoided, which one of the other guests, actually, Gilbert Doctorow, specializes in following very, very closely, and I'd recommend people to tune into his substack if you really want to discover what's actually going on with the war rather than what we are told in the mainstream media. I mean, basically, the central banks are all bust. They're all in negative equity. If you account for it properly, for all the bonds they have bought at far higher prices than the current level, with yields far lower than the cost of financing their holdings. We've got commercial banks are trying to reduce their exposure to risk. And that means that zombie companies are going to be threatened. The inflation story isn't over by a long, long chalk. And I mean, just the root of inflation is basically budget deficits. And, with the next president of the United States, and I don't care who it is, that deficit is going to increase. You're looking at a budget deficit, I think, perhaps in the next fiscal year, starting from September, of over 10%. Now, that just feeds into inflation. It feeds into a fall in the purchasing power of the dollar. And other countries are in exactly the same position. In fact, the dollar is probably in the worst position because it's got a debt to GDP, government debt to GDP, of around about 130%. And that is a debt trap, particularly when the two major foreign holders, China and Japan, are net sellers. Do you want to really hang around in credit, which is basically currency? People tell me currency isn't credit. Well, it is. I mean, just look at a central bank's balance sheet. You've got the currency on there as a liability. That is your counterparty. They're all bust. So, yeah, get out of credit. And where do you go to? Where do you go to? You go to real things, perhaps, some real things. But if you want to store a value, then you've got to go into gold. And someone put it for small change into silver. So that's basically where you go.
And I guess that's what we see also reflected in the gold price. That people are getting out of credit and into, for example, gold.
Well, it's an interesting one, Paul, because they're not doing it in the West. I mean, it's those pesky Asians who understand this. And now they are admittedly politically motivated to the extent that they want to do away with the dollar. So actually, what they're doing is they're selling the dollar rather than buying gold. But you've got to bear in mind that the Chinese households are huge savers. It's estimated that they save roughly 35% of their income. And that's the equivalent of about $6 trillion every year being saved. And where does it go? It's not going to go into property. It's not going to go into, because I mean, that's yesterday's story. The stock market, it hasn't performed. It's not likely to enthuse anyone. It's going into bank accounts. And these banks now, by law, have to offer gold accounts. And those gold accounts, you don't need more than the equivalent of about $70, $80, if you like, in yuan, 500 yuan. You can open a gold account. And that's basically where it's going. And of course, the banks then have to go and get some gold to back their gold liabilities, which at the moment look like increasing. And I think that this move into new high ground, measured in dollars, is only going to encourage, if you like, potentially a sort of cascading effect of people just going in and buying it and saying, well, this is the game to be in. This is the best protection we can have. So, yeah. But in the West, I mean, this is the extraordinary thing. In the West, I've never really seen this before, where you get a market going into new high ground and nobody's interested. I mean, it is absolutely bizarre.
Yeah, it's interesting because, as you know, I also co-own and run a gold company here in the Netherlands. Yeah. And as we record this conversation on Tuesday, the 20th of August, gold prices are about to break record highs again in euros. And we see at the moment more people selling back to us than buying from us. Of course, we are fine with both as a dealer, but it's interesting to see that that's the movement we see here in the West.
Yeah, that is, yeah. I mean, this is. I'm hearing this story all around, and one of the things that I've been told by at least one source is that quite a lot of the sellers are people who just need the money.
Exactly.
You've got people without any savings, and they've got maybe a few coins, silver coins or gold coins, and they're having to sell them in order to pay the bills. Which I think is tragic because they should be in a position to be able to hold on to that as the value of credit goes down. I mean, it is a very serious thing to see credit. I mean, the entire economy, everybody's economy works off credit, and particularly with a fiat currency. It's entirely credit. And if the purchasing power of that credit collapses, you're left with nothing. It's, and the idea that you can, don't worry, you can own a house or something like that. But the problem is that the house is priced in credit. Unless you've actually got gold, you're not going to be able to transact, if you like, buy houses, whatever. I mean, it could well be that the price of a house in Belgium or the Netherlands might be 3, 4, 5, 10 million euros. But I mean, if 10 million euros buys a cup of coffee at Starbucks, then it's not much good.
But that's where I disagree with you, because when you said it also at the presentation back in Belgium, I always remember the stories of the inflation king in Weimar, Germany, Hugo Stinnes, who was one of the wealthiest entrepreneurs in Germany in that time, in the Weimar Republic, and also because he just bought huge amounts of Reichsmark and bought up whole streets, and then the currency was debased, and he ended up with a lot of worthless debt, but also a lot of real estate. So for him, he could easily pay off the debt, and yet he has still had all the real estate. So as a consumer or a company, knowing that we are going to see a lot of inflation and debasement of the currency, why would I not go into debt?
Well, but I would just correct one thing about Hugo Stinnes. Hugo Stinnes basically had gold. Or rather, he had dollars which were convertible into gold at the rate of, $20.67 to the ounce. So, I mean, that's he was leveraging himself up in collapsing paper marks to basically run export businesses. That's really what he was doing. And also utilities. I think RWE was one that he founded.
True.
It meant that he could buy estates of distressed people. I don't know what the paper mark price of, let's say, a 25,000 hectare estate somewhere in the Black Forest would be. But it would be so many noughts you wouldn't be able to count it. But again, it was in the paper, which just became completely valueless. And one of my favorite stories was recounted by an Austrian writer about property in Berlin. This is Stefan Zweig. I don't know if you ever read any of his work. It was a very fashionable but brilliant writer in German. Not that I read German, but the translations in English are good too. He wrote about the situation in Germany in late 1923. He said that you could buy a 6-bedroom house in Berlin for $100. And in a decent part of Berlin, mind you, I don't think anywhere was decent actually by the time the collapse of the currency had finished its magic. But you can see the point. And there were stories of wealthy foreign students, or with mum and dad, the bank of mum and dad behind them. They were getting their subsistence, if you like, being paid in dollars, and they could run out and buy streets of houses.
Yeah.
The distortions in the market are just horrendous. They really are.
So perhaps it worked both ways then. On the one hand, he had hard money, dollars, because of his exporting business. And on the other hand, he was able to maybe use that as a collateral to get a lot of Rijksmark debt as well, and with which he also could even buy more.
Yeah.
It's distorting the market enormously. And of course, the ordinary people are the victims of this whole scheme.
Indeed. But Stinnes, the banks sort of were falling over themselves to lend him money. Even because, a bank basically is a dealer in credit. And, with the collapsing currency, you would find that the interest rate would reflect the collapsing currency. But because it continued to collapse, and Stinnes was all for encouraging further inflation, it meant that, if he was paying, let's say, 100% per annum on, a loan from Deutsche Bank or whatever, he didn't care, because the currency was going down at twice the rate or 3 times the rate or 4 times, do you see what I mean? And this is actually a very important lesson, because everybody's, thinks that the Fed can control interest rates, other central banks can control interest rates. And the interest rates are the management, if you like, of an economy. No, it is not. It is the compensation for the loss of purchasing power of the currency in the main. And the idea that you have a recession, which is essentially, it was a slump in Germany, really. The idea that you can have a slump without prices rising, prices just fall, is complete nonsense, as the German hyperinflation proved. This is a fact of fiat currencies. Get out of credit, as I said earlier. Yeah. And last time we spoke, you said that you expected a new financial crisis relatively soon because of higher interest rates that were going to be implemented 2.5 years ago when we talked. We had, of course, a few banks going bust last year spring. We had Silicon Valley Bank. Of course, in Europe, we had Credit Suisse. But in general, I would say we haven't really seen a big crisis yet. Of course, also a few weeks ago, we saw a big stock market crash, especially in Japan, and also with some ripple effects in the rest of the markets. But we have yet to see something really big happening as a result of these higher interest rates. And now, of course, we're going to see lower interest rates again going forward, as the markets expect the Fed to cut like 6 times over the next few months. And the ECB has already started lowering their rates. Perhaps a bit naive, but maybe we're not going to see a crisis then, because things are going to be back to normal and everything is going to be fine in La La Land. Well, the choice is quite simple. Either interest rates reflect the falling purchasing power of the currency plus risk, whatever the risk is, or the currency goes down the swanny. It's as simple as that. Now, the Fed is under huge pressure to reduce interest rates. Market expectations are that interest rates will be reduced. The SARM rule was triggered the other day, which basically it's a rule which is based on the level of unemployment. And it's the 3-month moving average. And when it moves something like, I don't know, 0.5% above the 3-month moving average, whatever, it's been a very reliable predictor of recession. So everybody now expects a recession. I would expect a downturn in the economy. Certainly, I think if you take out the excess government spending, that roughly 2 trillion last year, it'll be 3 trillion plus, I think, in this current calendar year. If you take that out of the economy, then you've got no growth in it at all. So in other words, it's inflationary spending by the government that is buoying up the statistics in the economy. This basically means that the purchasing power of the dollar is going to continue to go down. Interest rates should go up to reflect it. I totally understand the dilemma that the Fed finds itself in now. It is going to have to do QE because there is a debt crisis with the foreigners not, as the marginal prices of US debt. They're not buying US debt. The only thing that's being bought really is T-bills. I mean, they're doing it almost all on T-bills with just the odd small bond issue. It just shows where they've got to. They can only finance this out of very, very short-term debt. This is the sort of situation which, you look at a company doing this and you say, this balance sheet is extremely dangerous. And, at some stage, people are going to turn around, or banks will turn around and say, we're not lending you anymore, and the company goes under. I mean, this is what the US now faces. So, what does Powell do under these circumstances? He's got the most appalling dilemma. Rates should go up because the dollar is going down. Now, if he cuts rates, the dollar goes down even quicker. And this is why, I think if you look at the, not just the price of gold, but look at the dollar's trade weighted, we now have a death cross on the chart, which basically means that the trade weighted index is going down, and probably quite radically. So what do the hedge funds do? We know the hedge funds in the futures market, what they do, they're pairs traders. They either buy gold, sell dollar, or sell dollar, buy gold. Well, at the moment, they look at the death cross on the dollar. They can see all the background to it. They're becoming aware of the background to it, perhaps, with the carry trade being disrupted, which has been, I think, a large part of the support, if you like, for US government funding. They can see that coming unstuck. So, on that pairs trade, if they're selling the dollar, they got to sell it even more to buy gold. So this is why the demand in the futures market. And I wouldn't be surprised if this afternoon, this is Tuesday the 20th, I think. I wouldn't be surprised to see this afternoon gold going considerably higher in the absence of any statistics or remarks from a Fed official, which, gives the shorts the encouragement to bang the market and try and shake out a few weak holders. That's always a risk in this, isn't it? But
because you said on your Substack, people really need to check out your Substack. Perhaps you can already mention the name of your Substack.
Yeah. But, Macleod Finance Substack is probably the best way to Google for it because my spelling.
I'll put it in the show notes. Yeah,
Alasdair Macleod is not necessarily easy to spell. You might think you can spell it, but it's not so easy.
Yeah, I'm finally able to pronounce it correctly after all these years, because we go back for 12 years. So at last, I know how to pronounce and write your name, but.
Your name is a bit of a challenge, Paul.
Yeah, absolutely. Yeah, ask my Ecuadorian mother-in-law to pronounce my name, and every time is different. But you said in one of your posts that you expect gold to reach $3,000 before the end of the year, and if that would happen, a breakout to 3,000, it could be a life-threatening, your words, experience for some bullion banks, requiring a behind-the-scenes rescue operation to ensure the integrity of the contract. Sounds ominous. Please explain.
Yeah. Well, basically, I don't make forecasts. What I was doing was merely saying what the chart is saying, because it's broken out of a very, very bullish consolidation, an upward sloping flag, which found support on the 55-day moving average. it's very, very simple. It's a very bullish chart. And it's just a question of measuring in, the move into the flag and adding it to the move out of the flag, and that gives you $3,000. I mean, this isn't a forecast. This is just what the chart says. And I would conclude, I think the big bullion banks have probably got their books square or got some gold on the books because they understand what's going on. The JP Morgans and all the rest of it. They're members of the Shanghai Futures Exchange. They do have the intelligence, which is almost as good or perhaps better than government intelligence. So, those big boys, I wouldn't worry about them too much. But I think there are a lot of the smaller bullion banks who are probably getting into trouble on this rise. And this is really reflected on COMEX in the shorts. There are obviously positions in London as well. The positions in London are far larger usually than they are on COMEX, but the different nature of it is that COMEX is perhaps more volatile in terms of what's, price and the way in which the relationship between the managed money, which is the hedge funds, and the swaps, which is the majority. The majority of swaps are bullion bank trading desks. They whip things up and down quite a lot. London, I suspect, is less volatile, but bigger volumes. But the point is that the short position, the swaps short position, is around about $70 billion. It's roughly $2.5 billion each. Now, that's an average. That's a hell of a position, really. It's a record. And they can't claw it back. Now, sooner or later, one of these, because remember that $2.5 billion is an average. There are going to be some a lot less and some a lot more. Whoever it is who's got a lot more, I think has got a problem. And as the price goes higher, and as the hedge funds go in and buy even more contracts, which are created in effect by the swaps, I would not rule out a rescue. Now, I think the rescue would be behind the scenes. We wouldn't be aware of it. But there are bound to be one or two behind the scenes crises, which we will not be privy to.
And will they be rescued with the...
Then it'll make things even worse. If you see what I mean.
Yeah, if I hear something, I'll let you know. But will these entities be rescued with fiat money or with gold leased from central banks, for example? Or?
Well, fiat money preferred, I think is the answer. Yeah. Well, apart from anything else, they run their balance sheets in fiat money. So,
but if people ask for delivery,
this is actually what's happening. If you look at COMEX, look at the standing for delivery. It's almost every day in gold, and we're talking about some reasonable numbers. Some days you can get sort of 20, 30 tons demanded for delivery. And then, of course, on top of that, you've also got the facility to exchange for physical. Now, what that basically is you exchange a COMEX future for a London forward. Now, I think this is being used by some traders to supply gold to China, but you don't see it. The reason you don't see it is that, of course, the exchange for physical is a two-way thing. It can be exchanging a London forward for a futures contract. But in these conditions, I would hazard a guess, and I would even put money on it, that most of it is actually going out of futures into forwards. Now, what does that mean? That means that you take a future position, you swap it for a forward position, take delivery on the forward, which of course nobody ever sees then, and then ship it off to China.
Yeah.
And I think this is actually quite a source of getting liquidity away from us. And it's profitable when there's a decent premium on the Shanghai price. It's just an arbitrage. That's all.
Like Olivia Newton-John used to sing, "Let's get physical," and more people across the world are doing that. Of course, also all these African countries repatriating their gold. Holland has done it in the past. Germany, let's call their bluff, I would say.
I think that's right. I was very interested about the Netherlands repatriating her gold, which was in the wake of the Bundesbank. trying to get a small portion of her gold back from America. And I mean, that was scandalous. It really was. I mean, the Americans just refused to send it and then came out with a time schedule, which was, well, we'll do it in 7 years or something. I mean, do you know what that told? I mean, I tie that together with some work that Frank Veneroso, who is a very good analyst, did on leasing. I mean, we're going back to the late 90s. And Veneroso actually stood up in a conference in Lima and said that as a result of his researches, he believed that between 10 and 14,000 tons of central bank gold was out on lease. Now, that gold is gone. You know, it's not in the central banks. Watching the way the Bank of England operates, I think that the Bank of England doesn't have a problem with this because it will lease gold, but the gold basically crosses its books from, owner A leased to party B, and it's a lease and it has to be returned, and it just goes the other way. So I'm convinced that the Bank of England hasn't got itself caught in this way, but that leaves us with one major bank, and that's the Federal Bank of New York. The Federal Bank of New York, I think, probably has a shortfall of on Frank Veneroso's figures, we're looking at 10,000 tons in 2002. Now, I think that explains why they had such difficulty complying with the Bundesbank's request.
Yeah.
But
they had to scramble all the gold they could find. They had to go to pawn shops and.
Yeah. I didn't do the analysis, but I mean there was enough talk around the time that the bars which were returned to the Bundesbank weren't the ones that they had in their register. I mean, I don't know, but I think the idea that you can store things honestly with the Federal Bank of New York, I mean, forget it. I mean, I think they're a bunch of thieves on the quiet.
Yeah, well, and then maybe as a final topic, the presidential elections, do you think that's going to make we already alluded to it earlier, but it's going to make any difference in terms of how the US is going to run their finances, deficits, debt issuance? I mean, I heard Donald Trump talking to Elon Musk, and they were talking about setting up this government department of efficiency, or they would vet all expenditures. But I mean, do you have any faith in the future president of the US to run a decent finance?
No. And I don't care who it is. I mean, Donald Trump is a spendthrift. He obviously has a very different approach from Kamala Harris, whose approach we've rarely yet to find out. I mean, Donald Trump basically wants to make America great. And his version of doing that is to cut out foreign competition with tariffs, so that American manufacturing can be profitable in America. Now, that to me means far higher prices for the consumer. Donald Trump claimed in one interview, which I saw, that this would, the tariff was a tax on foreigners, not on US consumers. Really? I mean, so we're looking at a level of profound ignorance here, even
on both sides.
Even with the so-called non-socialist good guy. Kamala Harris is something else. I mean, she's talking about price controls and all this to stop the wicked capitalists, ripping off poor people. I mean, look, to be fair, politicians will say anything to get elected. So we have to see actually when one of them is elected, actually what the policies will be. But this is not looking good. And not only that, but as I said earlier, if you adjust the GDP numbers for, just take out government spending out of GDP and then look at how the private sector, in terms of its volumes, is behaving. I mean, we're already in recession. I think it's Very, very simple. And as that gets worse, because recessions don't just stop, I mean, it is going to get worse with all the banks with their balance sheets over leveraged and all the rest of it. They're not going to provide extra credit. I would say that it's very likely that this, the deficit situation, budget deficit situation, is just totally out of anyone's control. And that is, and how are they going to finance it? Again, I come back to this problem. They're in a debt trap. 130% debt to GDP. China has decided that it's reducing its involvement with dollars because, and this is for geopolitical strategic reasons. Though I would guess that the people in the PBOC, who are not idiots, can see what's going on. They will be making a similar assessment to the one we're discussing right now. And basically will want to get out of dollars as much as possible, as quickly as possible. That is why they've been buying gold. Now, they haven't stopped buying gold. They've said they've stopped buying gold, but do you trust what they say? Never trust anything a government says or a government department says. So, but I do know that the demand for gold is likely to get out of control, if you like, want to put it in those terms. Before the average American, the average European, the average Brit wakes up to actually what it's all about, and that is the collapse in the purchasing power of their own credit. Get out of credit.
Yeah, and the Chinese have two reasons not to hold dollars. On the one hand, there's a big risk of them being confiscated, and if they keep on having access to the dollars, then there's a big risk of the dollars losing purchasing power. So those are two valid reasons not to own too much of them.
I would have hoped that the Americans would have learned from the way they treated Russia, stealing their reserves, reneging on their obligations to Russia, however you want to put it, that was actually a bit of a mistake. and perhaps they shouldn't do this again, because the one thing that they need is trust in the dollar. I mean, international trust in the dollar. And they've fundamentally ruined it. They need to claw back that trust. I can't see them doing it, but the worst thing they can do is go down that route again and say, right, well, over Taiwan, for example, or if you're supporting Iran, then we're going to sanction you. We're going to steal your reserves. We're going to cut you out of SWIFT, whatever. I mean, it's dumb. It's very, very dumb. And none of it's fascinating, Paul. And you talk to Gilbert Doctorow about this. I mean. The fascinating thing is that despite interest rates in Russia having to be 18% in order to support the friendless ruble, the Russian economy is actually progressing quite nicely. I mean, the standard of living in Russia has improved really markedly since these sanctions were brought in.
Yeah, there's quite some inflation, and a lot of companies cannot get access to Western parts, and most of those parts are like machine parts and everything are better from Western companies than for example, from Chinese company. Also, a lot of energy is being put into a war economy, and in the long run, that's not good for society. You'd rather have that money and resources invested in education, roads. So maybe on the surface, it looks like their economy is booming, but there's a second story to it as well. I mean,
I do understand there's a second story, but every time sanctions are introduced against a nation, they work around them. They find that they can actually, on a domestic scale, work around the sanctions and produce, if you like, the missing goods or the missing commodities or whatever it is. The prime example of this was South Africa in the apartheid days. I mean, we're going back to the 1970s. There were bans on shipping oil to South Africa. Now, that meant that Eskom, which was the main electricity provider, didn't have the power in order to, drive the electricity. But they came up with a way of cracking oil out of coal. They worked around it. And I can tell you that the South Africans that I know are incredibly entrepreneurial. It turned them all into actually even better entrepreneurs than they ever were before. I mean, there was an old saying, actually, and sport is a very good analogy for a lot of this. There's an old saying that in Britain, we play sport to keep fit. in South Africa, they kept fit to play sport. And that's a fundamental difference. And, you sanction these guys, they'll find a way around it. And by God, they were good at it too.
Yeah.
And, but, and I hear what you're saying about Russia. The situation is complicated also because they're on a war footing as well. Yeah. But generally, you'll find that, I think the standard of living in Russia hasn't actually suffered too much. I think it's probably improved quite significantly. And I noticed there was this, do you remember there was that concert? I can't remember the name of the place, just outside Moscow, where there was this bombing.
Yeah.
And I was fascinated to look at all the youngsters.
Crocus Hall or something, was it?
Yeah, something like that. Yeah. Yes, I think it was Crocus, wasn't it? I was fascinated to look at the youngsters, in a sort of terrible situation. They were all wearing Western clothes, I mean, this has gone a long way from the Russia which, Yeah,
there's lots of parallel trading via in Kazakhstan and all the other countries. But of course, it's more costly in the end because those companies in those countries, in Kazakhstan and all the other stands, they want to make a profit too. So this indirect route of goods to Russia is in the end going to lead to higher prices for Russians. So, but I'm not condone. I'm not a fan of sanctions because like you said, in the end, it's usually the common folks suffering from sanctions and not the leaders they are trying to target. So the same thing, of course, in Venezuela. Yeah, it's only exacerbating things, and it also leads to this effect where people rally behind their leaders because they are going to hate the other countries even more because of the sanctions. So it's actually creating also an opposite effect.
Sure.
But yeah, well, let's hope that war will come to an end soon. Great talking to you again, Alasdair. Anything else? You already mentioned your Substack. I see how productive you are. You're putting out a lot of articles, and I'll put the link in the show notes. And you're also still, of course, publishing research for Goldmoney.
Yeah. Yes, I'm still head of research for Goldmoney, but really the point about my Substack is I want to reach the widest possible audience, and Goldmoney is more interested, if you like, I think, in the sort of larger customer rather than the ordinary person. Because I think it is desperately important that we educate people about what's going on, and this requires a stance which is completely independent of government. Because it is government which is ruining our lives. We can't afford our governments anymore. It's really what it boils down to. By taking away the sheet anchor for credit, which is gold, as conversion, if you could submit your euros for gold at a fixed price, then the euro would have consistently reasonable interest rates set by the market, not set by central banks who got no skin in the game and don't actually know what the role of interest rates are. This is the message which I'm trying to get over to as many people as possible. So, yeah.
Yeah, you're doing a great job at that, Alasdair. I also see you've grown a lot in terms of followers on Substack and also on X. So congrats to you, and would love to have this conversation and every now and then on Reinvent Money too.
Very much my pleasure. Thanks for having me on, Paul.
Thanks, Alasdair.